Well, good afternoon, folks. Hey, it's Shooter. Of course, sidekick here, Roscoe. Of course, at the end of our presentation, please do review our disclosures. Okay, hey, I see this as a dead cast bounce. I'm seeing it in multiple count. So, honestly, that's my vote. However, clearly, we've seen this Fed being able to rally these markets with basically nothing. So, honestly, it's your pick, which side of the fence you want to be on. So, I think we're short-term bullish to neutral. I don't know that we're going into a bear market here or a bear trend lower because we stalled out at our prior low. So now this week, we got a lot of earnings this week. Amazon, AMD, which by the way, market's now shifted. They think AMD is going to report losses. Apple is also supposed to report losses. Supermicro, I don't see how they don't beat and guide ahead with what's going on between Microsoft, Google, and Nvidia. I just can't see it. Where the chip's coming from, So Sophie's supposed to beat, PayPal's supposed to beat, Lilly is supposed to beat. However, I didn't like their charts. So now Coinbase, I think Coinbase is going to have a banner earnings because they've had the ETF margin, the revenues coming in, which were not there prior to this. So they had all of those new ETF buyers. And on top of that, they've been pumping that ad, where you can take your IRAs and move it over there and get that $405 bonus or whatever it is. So now that might not show up till next report, but I do think Coin beats. So Square also looks good on the rebound, except for I didn't like the chart as well as I did some others. So, and ON is also supposed to beat. So looking at the dollar is going nowhere right at the moment. However, the yen, and I'm going to focus on the yen for a second, went to 158. If something's going to break, either the DDOG has got to raise rates, right, to bring the parity in, or something's going to break. The core listens to U.S. indices, and the U.S. JPY pair has been historic, and it's been totally distorted, really, in this whole rally. So the challenging part is, does it break enough where liquidity is removed from the market and indices draw down from that? And to be honest with you, I don't know. That's a little beyond my pay grade. I try and get a grasp of that, but to be very candid, I just don't like it right now because it's like a outlier event for me, and I don't like those. Now let me jump and look at the TLT treasuries. Now, the daily here says we got much more room to the downside. I mean, the count just has really fallen off a cliff here with this leg here. And we're squeezing on the Bollinger Bands. So, we have a lot of room potentially. I don't see how we don't go down below 80, obviously. But here again, on an FOMC week, God only knows. I mean, because this is my true nemesis. But looking at the chart, the technicals, this has some significant downside. I would say that we get a slender point very similar to this on the downside, which should take us close to that 82, I think. And then we should broaden and bounce, about $7, I would think. But I think that has a lot to do with the dollar and the yen. So those are the factors there. Now, this week, I tried to stick with earnings. Now, I'm sure you guys have noticed, gals have noticed that my charts have changed just a tad bit for swing trade notes. I'm trying to be much more focused. All right, so what I'm looking for is a low that is tradable with some kind of catalyst. Okay, again, super micro. I don't see how they don't beat. We're already running, we're already pushing out this low. So I think a modest trade is back around 950 because that's 50% back on this entire leg. So going into positive earnings, whereas, we really could push right back above this high with stellar earnings. There's a lot of upside. I can't see it going $200 in one day, but surely 100 to 150 bucks is viable. So I like the May 17 1000 calls. Now they're going to pay less if it's mediocre but good earnings, all right? And the earnings are the 30th, which is Tuesday, so you don't have a lot of time to put something on here. But that's my thought. Of course, like any other earnings, I view it as a lotto. So don't invest capital you can't afford to lose. All right. So now, Datadog, I like this setup. This long, going into earnings. Who has been benefiting from AI? Data centers. Okay. So I think they do a decent beat. I didn't really like the breadth of the count right around the breakout. However, 50% back gives us about 140, 48, 80. and I went with 147.29. Can't tell you exactly why I did that now, but there was a reason for it. And again, I'm going to look at the May 17th. I always prefer the monthlies unless there's enough volume on the weeklies to justify stepping down. And in this case, I think there's too much upside, so this might be something we carry for a while. So I like the 145 calls, about 15 bucks higher than where we are. And earnings is out just a little bit, 7. So, this is something that we can put on now or wait till after FOMC, but it still was one of the best looking charts that we had out there. However, SMCI had a bigger catalyst in my book, which is artificial intelligence. So same theme, just different area of AI, I guess is the way to put it. Now, Novo should do, this is sort of I didn't like Lily's chart. So, however, I did like the way that Novo Nordisk AS count was. We had a prior high. Looks like we've got a breakout ahead, which pushes up to about 131. Not a lot of room. I like the May 17th, 135 calls. Reason is because this leg would measure up really about 132.98, but I went with the 23.6 as my target just because it was shallow. And it's within my theme I'm trying to stick to through this earnings, which is trade time, 4 to 6 weeks, 8 weeks out, and the options. However, with the thinking that it manifests in a very short period of time, less than a week or so. And obviously we enter, and then as soon as we get our targets, we're getting out, taking the profits and moving on, looking for another setup. Reason being is that follow through has just been very limited in this market, except for the names that are being chased by the funds, and obviously the big trading houses. And you don't know when they're going to rotate in and out. You can have the FOMO come in and it pump, and then all of a sudden, all the volume's gone and you lose it. So the challenging part is holding something in longer term swings. So we're trying to stay shallow. So, but here again, we like the May 17th, 135 calls, and earnings are Thursday, May 2nd. All right. So that's what we have for today, folks. Great trading. Until next time.